Hi traders, hope you're well. Welcome to my video on the Tarzan Indicator, where I'm going to show you a simple strategy that you can use to capture moves like this one for almost 700 pips. So I've downloaded the Tarzan Indicator and I have it here displayed below my chart. Okay, the basics of this indicator is to try and catch entries into market trends. Okay, so it uses an RSI and the moving average to identify bullish and bearish sentiments. Okay, it also draws the arrows and changes the colors to just help it look better on your charts, for want of a better explanation. I mean, it doesn't do something that I don't feel you could do yourself manually. However, I will break it down into sections and provide a simple strategy that you can use on any trading instruments, so Forex, stocks, cryptos, commodities, indices, etc. You can use this on any trading platform. Okay, and this is a 1 hour chart. It's a US dollar, Canadian dollar chart. You can trade any chart time frame. I would just look at the 1 hour charts and above because they contain more price data and therefore I find signals tend to be more reliable. That applies not just to technical indicators but also price action analysis. It's just logical that if there's more price included within the candlesticks, that the signals are going to be more reliable, in my humble opinion. And when we can capture massive moves like this for hundreds of pips, okay, in the space of a few weeks, I'm not sure why we want to try scalping a few pips here and there on the 1 minute and 5 minute charts. You know, if we trade smart, not hard, and we can make our life a lot easier and avoid unnecessary losses as well. Okay, so the first thing we do is we look for a trend. You can do that by drawing a trend line, easy as that, believe it or not. Or you can just look at the indicator and wait. See these lines here? You just want them to be heading in an upwards trajectory. So like here you can see they're moving up. Okay, this squiggly line here, for want of a better explanation as well, you can just ensure that that is heading in an upwards direction like it is here, showing divergence to the upside as well. Okay, so these are all bullish signals. Once we've established the direction of the market, we're only going to trade in that direction. So once we see the market's making these higher lows, we're only going to place buy trades. So this can avoid unnecessary losses trying to look at these red arrows. So we just ignore the red arrows. Same with the red dots here on the indicator. Okay, we're only going to look for long trades because the market is trending upwards. The trend is your friend. We want to trade against the tide. We want to trade with it. And we want to try and buy as low as possible into this move. Okay, so the first, once we've established that, the first thing is the trend direction. I'm going to look to time our entry into the trend. So how do we do that? Well, the first thing we do is we look for a pullback, okay? So the pullback, probably the initial pullback is here. You see this after this initial rally upwards here. Okay, we had a pullback. And if you look at the indicator, you can see that the dots actually change colors. So they go red, okay? When they go red, this is our warning to start looking for an entry, believe it or not, into the trend. So a buy entry once it changes back and goes in our direction, okay? And how some traders will do it is once they see these green dots appear and these lines start to head upwards, okay? So probably around here somewhere, they would look to buy then, okay? Obviously, we've got the bullish divergence backing us up as well, so you could have bought around there, okay? What I prefer to do and what other traders would do is just wait for a breakout of resistance. So you can wait until this resistance level here. We just look at the most recent resistance. So pullback resistance, market's making higher lows, and we just trade on a breakout of that resistance. And we're into this trend at a good price point. You consider how far up this trend goes. Let's just say to here, for argument's sake, that particular breakout trade there could have banked us over 550 odd pips. Okay, granted, not everybody's going to keep the position open till here or close at the perfect time, but what I would do is once we've taken an entry is place the stop loss just below the recent low. So here, which is only 15 pips, which is a relatively tight stop loss for the 1 hour charts. Okay, and then I'm going to use a trailing stop. So as price is moving up, I'm just going to move the stop loss below the low, 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 and just trail the trend as much as possible. What I don't want to do is have a 15 pip stop loss, see price go up to here, 40, 50 pips, and just panic and exit the trade, get excited, all 50 pips profit. It's a good trade nonetheless, but you're just leaving way too much on the table. Okay, we need good money management. We can have the best entry in the world, but if we're just gonna leave, have a 1-to-1 risk to reward ratio and just we take a few losses and then we're chasing our tails, it's just making lives harder for ourselves. When we capture big moves for hundreds of pips, we can afford to take a few losses here and there until we eventually catch the trend. So if we had a 15 pip stop loss and we took 4 losses and we're down 60 pips plus broker fees, we don't cry about it, because when we do eventually catch trend, we can make 300 plus pips by riding the trend by using a break even as well. So look to lock in the trade at break even so we don't let a winning trade turn into a losing one, and then just trail the price as closely as possible, giving it some room to breathe. Obviously, you can have spikes like this that will take us out, but you can always re-enter. Just be careful not to buy high or sell low. If you didn't miss the initial entry, okay, so still the same. Trend direction is upwards. You can see this resistance that we traded the breakout of then actually became support, just emphasizes the strength of that level there. So you could have traded the breakout, or you could have waited for a pullback to touch the line. However, that won't always happen. Okay, but there's ample opportunities. Again, you have another pullback here. You see the trend. Markets keeps making these higher lows. Okay, pullback and a breakout. Could enter there. That resistance then becomes support. Got a bullish hanging man candlestick formation, a 3 inside up candlestick formation, lots of bullish price action. Okay. You missed that one, not to worry. Same thing again. Pull back, draw your resistance, trade a breakout. You missed that one. Well, you're a bit late to the party, but never mind. Pull back, breakout. Okay. In fact, there was one even there as well. Resistance, big breakout there. No coincidence that resistance then comes support, continuation. Okay. So on and so forth. And you can do this more or less all the way up on this particular trend. Pullback, breakout. As you can see, I don't really even need this indicator, this Tarzan indicator. We can just do this ourselves. It's simple price action trading. I don't like to rely on, magical unicorn indicators. I just like price action trading with good money management, good trading discipline. I think too many traders are out there looking for the holy grail indicator that will tell them to buy and sell with 100% accuracy, and they just end up wasting their time. There's a reason candlestick patterns have been around as long as the markets have, and if you just understand basic price action, support, resistance, trend lines, candlestick patterns, which are not necessary from my perspective, but they can help confirm signals. For example, this, when you see this bullish hanging man candlestick pattern here, just zoom in on that, that this is probably a strong level of support. Okay, and then you can see confirmed by the higher lows, 3 inside up candlestick pattern there, bearish, bullish, bullish, breakout of that resistance. It's all, we just know there's plenty of strong indications here for a long trade. Okay, going back to this indicator, if we're forced to use it, well, how I would do it in this instance, I've kind of cluttered up the chart now showing you these examples, but looking at the indicator, when it changes in an uptrend, when it changes from red, when it goes red, that's when you want to look for the pullback. Okay, so if you can see here, the indicator goes red. Okay, so then we look for the pullback here, and there is a pullback, and that's when we draw the resistance and trade the breakout of resistance. Some traders would trade as soon as it goes from red to green, and you can get in earlier, but I prefer to wait for the confirmation. Okay, so here you have a clear red, all these red dots here. Okay, the line's dropped down as well, so this is a pullback, and you can see, looking at the chart, is a clear pullback. We can enter on the breakout there, or when it turns, the indicator turns green. So it goes red again here. What do? We look for a pullback. There's the pullback, trade on the breakout. Okay. Red again, look for the pullback, trade on the breakout. And by the time we're up here, if we just zoom out, okay, we've already had this move, so you want to be cautious. That being said, this trend did actually continue quite significantly, but had our trailing stop taken us out around this point, we could have looked to have re-entered. We could have re-entered again, just we know we have our level of support. We have the market making these higher lows. So we're in an uptrend. Okay, we get our green, then we get our red, then we get our green again. So when we're in our red, we look to draw our level of resistance, which is around here somewhere. Okay, it's a choppy market. It's not the best trading conditions, nonetheless, still a trade opportunity there. Okay, but you might just want to wait for a clearer breakout, probably perhaps something more concise like this. Okay, you can see that big rally upwards, and then that way, these lines are facing up as well. Green, when they go red, what happens when they go red? We draw our resistance, and then you could just trade on the breakout there. Okay. So that's a way to interpret the Tarzan indicator and use it in your trading. It's not necessary. You can just draw the trend lines yourself and trade breakouts like when you see a clear downwards trend here. Okay, you can just draw your support M chart pattern there. See that M? And a breakout to the downside. You could have entered on the breakout there, or you could have waited for confirmation on the pullback. This pullback here and a breakout down. You've got your bearish. You've got your spinning top there, followed by a bearish engulfing bar, 3 black crows, lots of bearish signals there. Okay, and you just wait for your pullbacks. Pullback, breakout, no coincidence, big breakout candle, lots of pips to be made. Okay, if you would have taken this first breakout up here, you're looking at around 250 pips potential. Again, break even, trailing stop. You can close part of the position as well if you want to bank some pips on the way down. We just look at the indicator here again. As I said, when it's red in a downtrend, you wait for it to turn green, and then that's when there's a pullback, and that's when we could draw a support level and enter on a breakout of that. Or you can just enter when the dot changes color as well. Okay, the more obvious the pullbacks are, the stronger they tend to be. When I say obvious, you can see here all of these green dots they're more clearer than say this pullback here. Okay, you're just in a bit more of a market indecision when it's constantly changing colors. Whereas here, all of these green dots just show a clear and obvious pullback, plus this line being high up as well, showing perhaps an overbought scenario based on the RSI, as I said, this indicator. So that can also help us time our entry, having these lines high. If we're thinking about selling, and if we're thinking about buying, we want to have those lines low, okay, as well. Okay, so I do see good potential with the Tarzan indicator. Said you can use any trading instrument, any chart time frame. Make sure you got good money management, good discipline. Obviously, don't let fear, greed, anger, don't trade in revenge, don't let negative emotions cloud your trading decisions. Don't force trades that aren't there. So many instruments to choose from. Okay, and check out some other videos with price action analysis, candlestick patterns. I think you can make your life a lot easier. Sometimes I see charts filled with so much junk you can't see the wood from the trees, and trying to trade, a cluttered charts for a few pips on the 1 minute or 5 minute charts doesn't sound like fun to me. Maybe I'm old school, but I'm just looking to catch long-term trends on higher chart time frames. I mean, more pips, less time trading, more reliable signals from my experience. Yeah, I'm not so sure why traders try to make life difficult for themselves. Obviously, brokers want you to pay more in spreads and commission fees. So maybe that's why they encourage such trading strategies. But there is no, holy grail crystal ball indicator. You just need to learn how to read price action, how to have good discipline, how to trading plan, and stick to it. And you don't necessarily need indicators like this, but if they visually help you trade, that's fine. But just to emphasize my point, if we just remove the Tarzan from the chart, okay, we can see a scenario where support, okay, uptrend, and then we can just trade a breakout of resistance. Okay, resistance, breakout, resistance comes support. Whether you trade the breakout or you trade the pullback to the support, there's a trade there. Okay, and again, uptrend, pullback, breakout. This is my way to trade. You trade how you want, what works for you. What works for one person won't always work for someone else. You've got a nice wedge formation there. Okay, market's making higher lows, breakout, good money management, no problem at all. Okay, I try to avoid choppy markets. Like scenarios like this is just a mess. If you're, perhaps you are taking reversal trades, you can use a stochastic oscillator or something to try and pick highs and lows. For me, I want to look for trends, obvious trends. You can switch time frames, you can switch instruments, but it's stuff like this I want. This, this is perfect. Resistance. Okay. Bull trap up here somewhere. Big breakout to the downside. As soon as we see that, we can just ride on the coattails. Breakout. Pull back, breakout. Yeah, like clockwork. Okay. Breakout. Support comes resistance. Continuation. Obviously, you don't want to sell at the low, but ample opportunity to get in earlier. Just as soon as you see a move like this, plan your trade. Okay, hopefully you found something useful in this video. I do appreciate you watching. If you can like and subscribe, that'd be great. And I hope to catch you on the next one. Take care.